Hi everyone, and welcome to the online MBA program at Penn State. I'm Barbara Yenner, the faculty lead for the Accounting Foundations concentration, which is also a graduate certificate in corporate accounting. So if you take the foundation courses, you will graduate with your MBA degree as well as a certificate in accounting. The first course in the program is Financial Accounting, MBADM 811. This is a core course in the OMBA program, so everybody takes it. I like to call this financial accounting course a course in language, because accounting, you might have heard this, accounting is the language of business. A lot of people think that accounting involves a lot of math. It really doesn't. Most accountants get along with no more than your basic algebra in their everyday jobs. So accounting is more of a language. In this course, there are no prerequisites, and we do not assume that you have an accounting background. But you will be learning a lot of vocabulary and a lot of sentence structure, etc., everything you would do in a language. So some of the vocabulary I'm putting here on the screen: revenues and expenses, amortization, LIFO versus FIFO. These are all terms that you may have heard in the business world where you work. So this course, along with vocabulary, covers structure. And so rather than sentence structure, we have the structure and content of the financial statements, which are prepared according to GAAP, generally accepted accounting principles. So you'll learn about the financial statements and then about the different accounting issues that come up when you are reporting the financial results of the company on those financial statements. So issues arise in how to account for inventory, which gets you to LIFO versus FIFO, and there are other inventory methods as well. Depreciation methods, cash flows in and out of the company, and so forth. So a lot of accounting issues arise in your daily business transactions. So the financial statements are really management's communication of financial results of the company, specifically on the income statement, and their financial position on the balance sheet. So as transactions happen in the company, those are recorded in the accounting system, and they end up on the financial statements as a report of business to investors and to creditors. In this course, we'll also analyze those financial statements as an investor or a creditor would analyze them to determine whether they think the company is in a good financial position or not. Besides the income statement and the balance sheet, we'll also be talking about the other common financial statements. Our focus is going to be on corporate financial accounting. But the concepts that you'll learn in 811 apply to any kind of entity, whether it's a for-profit, a nonprofit, a corporation, or a flow-through entity. The accounting concepts are basically the same. If you do wish to go on to the concentration courses in Accounting Foundations, you'll need to earn a grade of B or better in 811. Now, the other courses in the concentration, first of all, include taxation. Taxation is important because every single business transaction has tax consequences. And again, we've got a lot of vocabulary if you're in the tax world or thinking about taxes. You've probably heard of ordinary income, deductions, maker's depreciation, non-taxable exchanges, which a lot of managers like to take advantage of, capital gains and losses, business credits, after-tax costs. So these are just a handful of some of the terms that you'll be talking about in this course. We'll start with individual taxation and talk about the basics of the tax code. From there, we can go into property transactions. A lot of individuals have companies that they report on their individual tax return because they're sole proprietorships. So they have property transactions. So that's a part of individual taxation as well as a part of business taxation. So property transactions, buying and selling property, result in gains and losses. And you'll find out how those gains and losses are treated under the tax code. We'll also talk about corporate taxation. And if you have that foundation in individual taxation, it's easy to see the differences between individual taxation and corporate taxation. And then there are other entities called flow-through entities, which are partnerships and S corporations, LLCs that many individuals are members of, or they own part of those types of companies. And those types of companies are taxed on an individual basis rather than at the entity level. So the gains and losses and the income and deductions for the entity flows through to the individual's tax return. We'll also cover international and state and local taxation and introduce you to those topics, and accounting for income taxes. Now, accounting for income taxes goes into financial accounting. We will also talk about accounting for income taxes in MBADM 811. But it's always good to repeat that information once you have a good solid knowledge of the tax code. And this is an exciting time because of tax reform. So Congress is debating the new tax policies as we speak. And so we know the tax code is going to be changing. And that creates a lot of planning opportunities for managers. Managers are right now beginning to think about how are things going to change for businesses once tax reform is debated and voted on. And what does that mean for how we conduct our transactions? So as I said, every business transaction has tax consequences, and that creates opportunities for managers to construct their transactions so that they get the best tax treatment possible. Now, another course in the concentration is auditing. So auditors' job is to assist in protecting the public's interest. So they are checking management and how management communicates the financial condition of the company on those financial statements. And in the process, auditors help management because they can point out where there might be fraud detected, or there might be some errors or inconsistencies in the financial statements. So it is a help to management as well. Some of the vocabulary for auditing would be internal controls, going concern, which has to do whether the company can stay in business or not, risk mitigation, a clean opinion, which is your standard audit opinion, documentation of all of the financial transactions, materiality, how important each transaction is, assurance. The auditors want to assure the public that the information on the financial statements is fairly stated. So management has that responsibility for fairly stating their financial statements, and that's emphasized in this course. It is management's responsibility to sign off on those financial statements. Management also has responsibility for controls over financial reporting, and they, again, sign off on that. So as potential managers in your companies, you do need to know what those financial statements should look like and what your responsibilities are for maintaining those controls over financial reporting. In this course, we talk a lot about auditor independence. An outside auditor or external auditor needs to be independent of management because they are checking their work, so to speak. And also that helps the economy too, because if investors and creditors have confidence in the company financial statements, the economy will continue to flourish. The course covers internal control systems and risks, which are in place so that the company can protect not only its financial system, but the physical things about the company, any inventory they have, controls over cash, controls over fixed assets, and all of those areas come with risks. And so in auditing, you study those internal control systems and learn what controls should be in place and how to evaluate whether they're actually protecting the company. There's a lot of documentation that is involved with transactions of the company. And in the old days, of course, this documentation was all in paper. Nowadays, it's mostly electronic. So the auditing profession keeps up with the changes in technology that have led to electronic documentation. And there continue to be changes, and there are challenges involved with those changes. So those will be discussed. When an auditor audits financial statements, they can't look at every transaction. And so they take a sampling of transactions or documents, and they examine those. So you'll learn about the sampling techniques that auditors use, and also the other audit procedures that they perform. Now, the audit ends up or culminates in an auditor's opinion. Most companies would like to have a clean opinion. That's the standard opinion that where the auditor is saying that we have examined these documents and there is nothing that comes up that we see could be a problem or that's a concern to us. So that's essentially what the clean opinion says. But there are other variations of that opinion because in certain circumstances some qualifications need to be made. So you'll learn about the different auditors' opinions that are possible. Another course in this concentration is managerial accounting. Managerial accounting is all about decision making. So managers base their decisions on internal accounting reports. They also use the external accounting reports such as financial statements. But internal to the company, there are a lot of much more detailed reports about operations and anything that has to do with inventory or fixed assets, just all of the detail. So the managers need to know about costs and budgeting and those sorts of things. They'll talk about overhead, fixed costs and variable costs, variances from budget, contribution margins, break-even point, capital budgeting, allocation. So these are, again, just a handful of the topics that you'll be talking about in the managerial accounting course. Cost behavior is a very basic managerial accounting concept, so that's going to be one of the first things that you would cover. You'll do some cost volume profit analysis where you will actually calculate break-even points and profitability. Budgeting, there are various budgets that need to be put together in the company, and then managers will analyze the variances from those budgets. That will tell them whether the company is operating as efficiently as it can, whether there are some bottlenecks or some problems where costs have risen and what is happening to costs and so forth. Decision analysis is another area, and you would study the basic kinds of decisions that often go on in companies, such as pricing decisions and how managers approach those, whether or not to take a special order of a product or a service, whether to, if you have a manufacturing firm, whether to sell a product the way it is or to process it further to perhaps earn better profits. So those types of decisions will be specific to certain firms, but you'll learn the basics of decision analysis. Capital budgeting is another interesting area. Capital budgeting has to do with the investments in additional assets to either expand the company or to improve its operations. So you'll be analyzing whether it is worth it really to invest in these new assets. Allocating costs can be done in many ways, and so you'll be looking at different cost allocation methods in this course. And lastly, you will look at evaluating management performance. Managers are evaluated based on cost targets, as an example. They might even be evaluated on profits if they're responsible for profits in their area, or even on the increases in the stock market price. So there are various performance measures that are used for managers, and you'll be looking at the pros and cons of each of those. So this gives you a brief overview of some of the courses, of all of the courses that are included in the Accounting Foundation's concentration. So I encourage you to take that concentration. Accounting is relevant to every area of business, and an accounting background is attractive to employers because it is so important for the business. You can learn the language of business by taking the Accounting Foundation's concentration. But whatever you do decide, good luck to you in your MBA program and throughout your future careers. I hope to see you in class.